Hello everyone. In this video, I explain exactly how I determine if a stock is undervalued or not. We discuss price to earnings, price to book, debt to equity, return on equity, and intrinsic value. If you enjoy this video, please give it a like and subscribe as it really helps to grow this channel. Anyway, thank you so much for the support, and without further ado, let's get started. Here, I compare the price to earnings of AT&T to other stocks in this industry. I use macro trends to do this. However, feel free to use a different source to graph the comparison. AT&T's price to earnings is a relatively low 6 compared to AT&T's publicly traded competitors. Industry peers and competitors include Verizon, T-Mobile, and US Cellular. Be mindful that this chart is for quarter 3 of 2022, not today's price to earnings, so some numbers may be a bit off, but relatively similar for our purposes. AT&T's price to earnings is considerably lower, in this case, better than many of its peers. Verizon trades at a price to earnings near 8, T-Mobile trades at a price to earnings near 110, and US Cellular trades at a price to earnings near 27. This suggests AT&T is undervalued relative to competitors based on its price to earnings. Also, I like to compare companies to the price to earnings of the Dow Jones. The Dow P currently is about 21, while AT&T trades at a lower, in this case, better, price to earnings, and that can help to suggest that AT&T is undervalued relative to the stock market. Also, we must take a look at the historical price to earnings. The average historical price to earnings for AT&T is near 10, which can suggest that AT&T is trading at a lower valuation relative to its earnings compared to the past. Overall, for the industry, AT&T has a relatively low, in this case better, price to earnings at this time in my opinion, suggesting that the stock is undervalued. And for the price to book, AT&T's price to book is low relative to other companies in this field. Currently, AT&T has a price to book of around 0.8, with competitors having typically higher PBs, especially with Verizon having a price to book of 2.1. However, US Cellular does have a price to book that is around 0.5, but this is overshadowed with the majority of carriers having higher PBs. AT&T's price to book is quite similar relative to its past PBs near 0.85, which suggests AT&T is trading at a similar valuation relative to its past PBs. I also want to note that this is a low PB relative to the S&P 500 PB of around 4 currently. Remember, it is important to compare AT&T to not only the Dow Jones, but also to the S&P 500, so I like to use the Dow Jones for the price to earnings comparison, and I like to use the S&P 500 for the price to book comparison. Remember, the lower the PB, the better. Overall, AT&T appears to have a relatively low PB, suggesting that the stock is undervalued. According to the debt to equity, AT&T has a relatively fair debt to equity ratio compared to its peers. AT&T's debt to equity appears to be near 2.1, which is similar to most of its peers. Historically, AT&T has a debt to equity near 2.2, which is higher than its current debt to equity. Remember, the lower the debt to equity, the better. So, in this case, this is ideal. However, AT&T's debt to equity is relatively fair compared to its industry peers, suggesting that the stock is fair valued. Lastly, for the return on equity, we can see that AT&T has an ROE of 12.29%, with AT&T having an ROE in between close competitors. This can help to suggest that AT&T is handling its capital efficiently relative to its industry competitors, suggesting that the stock is fair valued. In terms of intrinsic value, the company seems to offer a significant upside of around 222.67% due to the relatively low trading price compared to its strong, positive free cash flow over the past 10 years and high shareholder equity despite its debt. I want to point out that since this free cash flow includes cash flows from Warner Media, now spun off from AT&T to form Warner Bros. Discovery, this intrinsic value is certainly higher than it should be. But even with half the free cash flow, which would certainly be enough to cover the cash flow provided by Warner Media, AT&T still has a discounted cash flow intrinsic value of $43.79 per share, much higher than the current trading value of the company's stock. Since the intrinsic value is higher than the current trading value of the company's stock, this suggests that the stock is undervalued. Now, there are multiple ways to calculate the intrinsic value, and this is just one way, so please keep that in mind. In the description, I will leave a link to my video on exactly how to calculate this intrinsic value with slow and simple steps. So, overall, compare the price to earnings, price to book, debt to equity, and return on equity to the stock's peers, in addition to calculating the intrinsic value, and with this info, you can estimate the approximate value of any stock. Overall, AT&T appears to be undervalued because the only other valuation suggested by comparisons that didn't say AT&T was undervalued was that AT&T is fair valued. As such, overall, the stock is considered to be undervalued in my opinion. Hope this tutorial was helpful, and thank you so much for watching. If you liked this video and want to see more content like this, please give it a like and subscribe, as it really helps to grow this channel, and please comment down below and tell us how you like to value stocks, and we'll try to get back to you. Anyway, thanks again for watching, and have a good day everybody.